What is the digital yuan? The digital yuan, also known as ECNY, is China's central bank digital currency, CBDC. Unlike cryptocurrencies like Bitcoin or Ethereum, which are decentralized and not controlled by any single entity, the digital yuan is a digital version of the physical renminbi, issued and controlled by the People's Bank of China, PBOC. This means that the PBOC has complete control over the issuance, distribution, and circulation of the digital yuan. In contrast to cash, which is anonymous, the digital yuan can be traced, giving the PBOC greater oversight over financial transactions. Additionally, the digital yuan can potentially be programmed with specific features. For example, the government could issue digital yuan vouchers that can only be used for specific purposes, such as public transportation or groceries. This programmable feature could also be used to implement expiry dates or spending limits, potentially helping to manage household budgets or control inflation. Why is China pushing for a digital currency? There are several reasons behind China's move towards a digital currency. Here are some of the potential benefits. Increased efficiency. Transactions could be faster and cheaper compared to traditional methods. By cutting out intermediaries like banks, the digital yuan could streamline financial processes and reduce transaction fees. This could benefit both businesses and consumers, making it easier and faster to conduct domestic and international payments. For instance, cross-border transactions currently often involve multiple intermediaries and can take days to settle. The digital yuan could potentially streamline this process, saving businesses time and money. Enhanced security. Digital yuan could be more secure than physical cash, reducing the risk of theft or counterfeiting. Physical cash can be lost or stolen, and counterfeiting is a constant concern. The digital yuan could potentially address these issues by leveraging digital security measures like encryption and digital wallets. Additionally, the digital yuan could potentially reduce the need for people to carry large amounts of cash, making them less vulnerable to theft. However, there are also concerns surrounding the digital yuan. Privacy issues. Transactions on the digital yuan network might be traceable, giving the government broad insight into citizens' spending habits. This could have a chilling effect on freedom of expression and dissent. For example, the government could track down individuals who purchase books or donate to charities critical of the regime. Additionally, the government could use this data to restrict access to certain goods or services. For instance, citizens with a history of protest or activism might be denied access to essential goods or services, such as plane tickets or high-speed rail passes. There's also a risk of data breaches, which could expose sensitive financial information to criminals. Breaches of financial data can be devastating, leading to identity theft, fraud, and financial loss. Reduced financial inclusion. The digital divide widens when financial inclusion hinges on digital tools. While digital wallets offer convenience and security, requiring smartphones and internet access can leave entire demographics behind. This disproportionately impacts low-income earners, seniors, and people in rural areas who may lack the resources or infrastructure for digital connectivity. To bridge this gap, alternative solutions like basic feature phones or agent-assisted services are crucial to ensure everyone has access to essential financial tools. China's global ambitions. China's ambitions for the digital yuan stretch far beyond its borders. They envision it as a potential game-changer in global finance, disrupting the US dollar's long-standing dominance as the world's primary reserve currency. To achieve this, China is actively collaborating with other countries through pilot programs, fostering a network of early adopters that could serve as a springboard for wider international acceptance. Additionally, They're pushing for the creation of international regulations specific to central bank digital currencies, CBDCs, to establish a framework for the digital yuan's integration into the global financial system. This strategic maneuvering, if successful, could reshape the landscape of international commerce and redefine the role of reserve currencies. A more multipolar financial system could emerge, with the digital yuan playing a significant role alongside the US dollar and other emerging CBDCs. The future of the digital yuan. The digital yuan's future remains an enigma, a puzzle waiting to be pieced together. While still under development, it has the potential to be a transformative force in global finance. Will it dethrone the US dollar as the world's reserve currency? Or will its impact be primarily confined to China's domestic market? The answer rests on a complex interplay of factors, including user adoption within China and abroad, the willingness of other countries to integrate the digital yuan into their financial systems, and the evolution of international regulations governing central bank digital currencies, CBDCs. User adoption hinges on the digital yuan's ability to offer compelling advantages over existing payment methods. Convenience, security, and potential features like targeted spending could incentivize users to embrace the digital yuan. International acceptance, however, is a steeper hurdle. Countries may be wary of relying on a currency controlled by a single government, and existing geopolitical tensions could further complicate widespread adoption. Finally, the regulatory landscape surrounding CBDCs is still taking shape. What are your thoughts on the digital yuan? Do you think it's a positive development? Let me know in the comments below. And if you enjoyed this video, don't forget to hit that subscribe button for more tech and business insights. Thanks for watching.